What's happening, crypto fam? Get ready, because the news cycle is absolutely exploding, and we've got the inside scoop on updates that could shake up the entire market. The pace is relentless, the action is nonstop, and if you're not plugged in, you're missing out. We're diving deep into developments that are setting the stage for what's next. First up, we're talking about a massive integration that could redefine how we transact, bringing a major stablecoin directly onto the Bitcoin network in a way that promises to supercharge its capabilities. This is big, folks. And speaking of market movements, even as the broader economy shows signs of strength with impressive GDP figures, the crypto space is seeing some interesting shifts. We'll break down how Bitcoin is holding steady while key altcoins are experiencing a dip, and what a top analyst is watching for to signal a real breakout moment. Plus, we've got the latest on government adoption of blockchain technology itself. But the story doesn't stop there. We're also tracking a major move in the public markets, where a Bitcoin-centric venture, with significant backing and a high-profile name attached, is gearing up for a massive public debut. This deal is already making waves, and we've got all the details on its structure, its potential impact, and the conversations it's sparking in the industry. Finally, we're zooming out to look at the bigger picture, how governments around the globe are strategically reshaping the entire crypto landscape. This is about policy, power, and the future of digital assets on a national and international scale. Stick around for all these critical updates and more. Don't forget to smash that like button, subscribe if you haven't already, and ring that notification bell so you never miss a beat. A transactional revolution on the horizon. Get ready for a seismic shift in how we interact with the world's leading digital asset. In a move that could redefine its utility and accessibility, Tether's native USDT is making its debut directly on the Bitcoin network. This isn't just another upgrade. It's a potential catalyst for a transactional renaissance, aiming to unlock new levels of efficiency and adoption for Bitcoin. Imagine the world's most widely used stablecoin operating seamlessly within the robust security and decentralized framework of the Bitcoin blockchain. This integration promises to dramatically enhance Bitcoin's capabilities as a medium of exchange, potentially paving the way for faster, cheaper, and more widespread transactions. For years, the conversation around Bitcoin has often centered on its store of value proposition, but this development could powerfully reassert its role as a peer-to-peer electronic cash system, fulfilling the original vision laid out years ago. The implications are vast, touching everything from everyday commerce to cross-border payments and decentralized finance applications. This is about making Bitcoin more practical, more integrated, and more relevant to a global audience than ever before. The technical underpinnings are designed to leverage Bitcoin's inherent strengths while introducing the stability and utility of USDT, creating a synergy that could unlock significant market demand and innovation. Think about the possibilities: micropayments becoming truly viable, remittances becoming instantaneous and low cost, and a new wave of financial products built directly on this powerful combination. It's a development that has the potential to not only boost the utility of Bitcoin, but also to significantly expand the reach and adoption of stablecoins in a regulated and secure manner. The market is buzzing with anticipation as this integration moves closer to full realization, signaling a pivotal moment for the future of digital currency transactions. But what happens when economic indicators show strength, yet the crypto market feels the pressure? We're about to break down the latest market movements and what they mean for your portfolio. Economic strength meets crypto volatility. In a fascinating display of market dynamics, the cryptocurrency landscape is navigating a complex environment where traditional economic indicators are showing resilience, yet digital assets are experiencing a period of consolidation and even decline. The latest U.S. gross domestic product, GDP, figures have landed, revealing a stronger-than-expected rebound in the second quarter, signaling robust economic activity. This positive economic news, however, hasn't immediately translated into a surge for Bitcoin and its altcoin counterparts. Instead, Bitcoin has been trading sideways, a period of consolidation that often precedes significant price action. Meanwhile, major altcoins, including Ethereum, XRP, and Dogecoin, have seen notable dips. Ethereum, in particular, has fallen below the $4,500 mark, a significant drop considering its recent record highs. This divergence highlights the intricate relationship between macroeconomic trends and the often speculative nature of the crypto market. Adding another layer to this narrative is the US government's unprecedented move to place GDP numbers on the blockchain. This action aligns with a broader national ambition to become a global leader in cryptocurrency adoption and innovation, signaling a potential future where government data and blockchain technology become increasingly intertwined. On the trading front, the market has witnessed substantial liquidations, with over $250 million wiped out in the last 24 hours, predominantly affecting long positions. Bitcoin's open interest has seen a slight increase, but top traders on major platforms like Binance are reportedly reducing their long exposure, suggesting a cautious sentiment among sophisticated market participants. The Crypto Fear and Greed Index currently sits in neutral territory, reflecting this mixed sentiment. On the technical analysis side, a prominent analyst has identified a key level for Ethereum. A weekly close above its previous all-time high of $4,891.70 is being watched as the crucial confirmation signal for a genuine breakout. This suggests that while the market might be treading water, significant upward potential remains if key resistance levels are decisively breached. The percentage of Bitcoin's supply and profit has also reached a critical 90% threshold, a level historically associated with bull phases, but also a precursor to potential corrections if it fails to hold. Now, shifting gears from market analysis to corporate strategy, a major Bitcoin-focused company with deep ties to a prominent political family is making headlines with its impending public debut. We've got the inside story. Trump-linked Bitcoin miner gears up for Nasdaq debut. In a move that could significantly reshape the public perception and market dynamics of Bitcoin-focused companies, a prominent venture with direct ties to the Trump family is set to go public this September. Griffin Digital Mining Inc. has seen its stock surge by an astonishing 231% in anticipation of its all-stock merger with American Bitcoin. This strategic union will create a new entity slated for listing on the Nasdaq Stock Exchange under the ticker symbol ABTC, marking a significant milestone for the burgeoning digital asset industry. The deal structure itself is noteworthy, with key figures from the Trump family, including Eric Trump and Donald Trump Jr., alongside Hut 8 CEO Asher Genoot, collectively controlling a commanding 98% of the merged firm. This substantial ownership concentration underscores the significant influence these individuals will wield in the company's direction and strategy. Adding to the venture's perceived legitimacy and institutional appeal, the Winklevoss twins, co-founders of Gemini, have joined as anchor investors. Their involvement signals strong backing from established players within the cryptocurrency ecosystem and provides a critical vote of confidence in the merger's potential. This development arrives at a pivotal moment for the digital asset space in the United States, coinciding with a series of policy shifts aimed at fostering growth and clarity. President Trump's executive order in March establishing a national Bitcoin reserve and the subsequent Genius Act in July, which introduced regulatory frameworks for stablecoins, have collectively created a more favorable environment for crypto firms seeking public market access. Griffin's ambitious $5 billion financing plan, filed recently, further illustrates the scale of its aspirations and its commitment to building a robust Bitcoin infrastructure. Despite facing operational challenges, including reduced cash flow and increased costs in a recent financial quarter, the company's leadership remains optimistic about the merger's potential to drive profitability and scale. The strategic alignment with a Trump-linked entity, however, has not been without scrutiny. Debates have emerged regarding potential conflicts of interest, although Hut 8's CEO has emphasized the new company's operational independence. As American Bitcoin prepares to integrate Griffin's mining operations and expand its Bitcoin treasury, it is positioning itself to be a formidable competitor in the increasingly dynamic crypto mining sector. The impending Nasdaq listing is expected to enhance its market presence, attract a broader investor base, and provide greater liquidity for its assets, potentially setting a precedent for similar ventures in the future. Finally, we're looking at the much larger global picture, how governments themselves are actively shaping the future of cryptocurrency. This is a story about policy, power, and the geopolitical landscape of digital assets. Governments worldwide realigning crypto landscape. The global stage for digital assets is undergoing a significant transformation, driven by strategic governmental policies and a growing recognition of cryptocurrency's potential impact on national economies and international relations. In 2025, we are witnessing a dynamic reshaping of the crypto landscape as nations worldwide grapple with how to regulate, adopt, and leverage blockchain technology and digital currencies. This isn't merely about oversight. It's about geopolitical positioning and the race to establish dominance in the digital economy. Several countries are actively implementing forward-thinking legislation and initiatives designed to attract blockchain innovation and investment. This includes exploring the creation of national digital currencies, refining regulatory frameworks for exchanges and stablecoins, and even considering digital assets as part of national reserves. The approach varies significantly, from nations embracing crypto with open arms to those imposing stricter controls, reflecting diverse economic priorities and technological readiness. For instance, some governments are integrating blockchain technology into public services, such as land registries or supply chain management, to enhance transparency and efficiency. Others are focusing on developing robust legal structures to protect investors and prevent illicit activities, aiming to build trust and foster mainstream adoption. The narrative is complex, involving discussions around monetary policy, financial stability, and the potential for cryptocurrencies to disrupt traditional financial systems. Key international bodies are also engaging in dialogues to establish common standards and address cross-border regulatory challenges, recognizing that the decentralized nature of crypto requires coordinated global efforts. Furthermore, the geopolitical implications are substantial. Countries that successfully navigate the complexities of digital asset regulation and foster innovation could gain a significant economic advantage, influencing global trade and financial flows. Conversely, those that lag behind risk being marginalized in the evolving digital economy. This evolving governmental stance is not only influencing the trajectory of individual cryptocurrencies, but is also shaping the broader financial architecture of the future. The decisions made today by governments regarding cryptocurrency policy will have long-lasting effects on economic growth, financial inclusion, and the balance of power in the global arena. As we move forward, understanding these governmental strategies and geopolitical influences is crucial for anyone involved in or observing the digital asset space. And that wraps up our deep dive into today's most critical news. But before you go, let's hit those headlines one last time. That's a wrap on a massive news day. We saw Tether's USDT launch on Bitcoin, potentially revolutionizing transactions. Plus, Bitcoin held steady amidst economic growth while altcoins dipped, with key levels to watch for Ethereum. We also covered the Trump-backed Bitcoin venture heading public on Nasdaq and the global governmental push to reshape the crypto landscape. Don't miss out on any future updates. Make sure to smash that like button, subscribe to Bitcoin Bulletin for all your crypto news, and hit that notification bell so you're always in the loop. Follow us on all social media platforms for more insights. We'll see you in the next one.